what you do. Give it all to you and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi, everybody. Good evening. All right, good evening, everybody. Welcome. All right, good to have you all here. Good evening, folks. And let me just check to see if Aaron is on. Not really sure. Good evening, Aaron. Are you there? Hello? Okay, I don't think he is. I'm not sure. He may pop in later on. Not really sure, but that's okay. We're going to go solo, and I've done it many times before. So, all right, good evening, everybody. Aaron, if you're on, just chime right in here. So, excuse me, let's get started here, folks. All right, good evening, everybody, and welcome to DayTradeSPY.com's week ahead intro to trading, week review, whatever you want to call it. All right, my name is Hugh, and it is Sunday, October the 13th, 2024. All right, and just going to let you read this for a second here, and I'll be quiet so you can go through this. And this is the normal disclaimer that we have to put up here. So, all right, I'm pretty sure you've read it all. All right, you're pretty sure you've read it all. I'm just going to see all these people coming online here. All right, good stuff. You alone are responsible for all your own trading, and past performance does not guarantee future results. There's the disclaimer right there. All right, so a couple things I just want to mention, folks. Let me go down here. There's a questions box. There I am. There I am in living color, and it's raining in the background here, so I hear the water dripping. I trust it's rain. All right, folks, there's the questions box. The questions box icon on your Zoom dashboard. Use that. I am the only one that sees that. And go ahead and ask whatever you want. We'll certainly try and get to some questions a little bit later on. Not sure we'll get to them all, but we'll take a look. All right. Okay, so let's move on here, folks. Meet your hosts. My name is Hugh. And most of what I learned about stock trading, believe it or not, came from the trenches. All right. Excuse me. It's I guess a bit of a background on me. Just very briefly came from corporate America, and I ended up having to. I was sort of thrown into this when my own financial advisor blew out about half my account. And that's when I realized I have to learn how to do this myself. And coming from an insurance internal audit background, I knew what risk was, and I was comfortable with numbers. I thought there's no reason I can't learn to do this myself. So I set out, took a lot of different courses, but most of what I learned that I actually all the stuff that I teach, I learned the hard way. And like I say, it's from the trenches. Now, what I like to do is I like to use short-term breakout trades for small, multiple daily gains. That's kind of my specialty. It seems to work very well for me. Aaron, on the other hand, he mastered this deep dive technical analysis back in his teens. When he was in high school, all his friends would be out there playing sports and chasing girls. He'd be down in the library looking at the Wall Street Journal and other publications and looking at charts, different things like that. He set up his own trading account, I think when he was like 17 years old or something. And so what happened was I had been doing this since 2010 publicly. I'd been trading a lot longer before that. Excuse me, but it was actually in 2010 I was sort of coerced into showing people how to trade. And we set up a very rudimentary website and inner circle, just kind of like just for fun more than anything else. All right. And quite frankly, I didn't think we were going to last more than a couple of months. It was just a fun thing to do. But as it turned out, they started telling their friends and their friends and their friends, and things just, mushroomed like crazy. And all of a sudden, before we knew, oh my gosh, okay, this thing's taking off like crazy. Better get serious. And so anyway, I've been doing that since 2010. And a couple of years ago, we were bought out by Eagle Financial Products, and they also scooped Aaron from a $150 million commodity fund, where he identified excellent long-term high probability trades, and he still does. So he and we do the trading room every morning live in front of many, many, many people, literally around the world, people. All right. And so I have my own set of indicators that I use to determine which way I believe the market is going to go in the next little while. And he also has his own set of indicators that he likes to use to determine where the markets are going to go, probably a little bit longer term out. But we have a saying that says something like, when our indicators unite, our trades ignite. And it is actually very, very true, because so let's say I say, you know what, I think the market's going to go to the upside. And he also looks at his indicators and says, I think it's going to go to the upside. You better be buying some call options, because the market's probably going to go to the upside and you will probably be making some very serious money. Anyway, we have this amazing dynamic duo in the morning. Although we do the trading room every morning, I like to call ourselves your morning breakfast flakes. But actually, we have a lot of fun too, folks. We have a lot of fun. We actually make some money, and I'll be honest, it's not 100% all the time, but usually we give you some pretty good advice. So, and some of the comments I've been hearing are just really, really excellent. I'll give you some of those comments a little bit later on. So, tonight, folks, we're going to be discussing here a review of last week, preview of next week. We're going to take a look at our 2 to 5K trading room challenge, give you an update on that, which is very exciting. So I'll give you a little brief on that. We started with a $2,000 account, cash account, back on September the 16th. The objective here is to take it up to $5,000 in 2 months to November the 5th, up to the elections, right? Then we're going to go out into the cornfield, have a little chat out there, and talk about your challenges. We'll take a look at some of your questions. We're also going to talk about why trade SPY. I guess why not? How we can help you answer some of your questions. Again, I've got a hot stock for you folks tonight. You're going to want to stick around to the end here. It's a hot, it is so hot, it's burning. It is just burning down here, and I better open the door pretty soon. And for those who are new to options, we actually have an options primer for you, which we will do at the end of the session. All right, so I know there's some new people here who have never traded options before. If you are new, let me know in the questions box. If you are new to trading, if you're new to options, if you are new to Day Trade Spy, if you're new to this webinar. All right, let me know in the questions box. All right, it'd be really good to know how many people here are actually new. And if there's not a lot of new people out here, if there's actually nobody, then we'll kind of skip over that. I don't want to hold you all night here ransom. Okay, Mitzi is new. Okay, we're gonna do it. Okay, we're gonna do it. So, all right, welcome again, everybody. A couple announcements to make here. First, the Orlando Money Show is coming up here next week. As a matter of fact, I am flying out tomorrow after the trading room. I'm in the Western New York area, Buffalo, New York area, but I'm going to be flying out tomorrow afternoon. I already got my flight, and then it's going to be held at the Omni Orlando Resort at Champions Gate in Orlando. All right, and as I understand it, they are they're in pretty good shape after the hurricane, which is amazing. I my wife is actually down in Orlando now. She's been down there for a good few days. In fact, she went through the hurricane, and of course, being very concerned, we're in constant touch with each other on that. And at the end of that ominous night, I believe it was, I'm not sure if it was Tuesday or Wednesday last week. Of course, I called her up to see, okay, what happened? She says, well, a few leaves in the pool, just a few leaves in the pool. That's about it. I said, really, seriously? Yeah, that's it. Okay, well, that's good. She knew a lot of gas stations were out of gas and stores were out of water and different things like that, but nothing that's of any danger or anything like that. So what we're going to be doing here is next week, excuse me, next Friday, Aaron and I are going to be at the Money Show. In fact, he's going to be speaking here. He's got a couple, excuse me, a couple presentations he's going to be doing here on Friday at 8:15 in the morning. That's pretty early, 8:15 till 9 o'clock. He's going to be talking about the art and science of catching a spy, and a little bit of technical analysis for you talking about his Fibonacci and his pitchfork, his ABC D pattern on Fibonacci, and going to be quite involved. And also later on in the afternoon, Friday at 1:45 till 2:15, just a half an hour, he's going to talk about how to day trade SPY using our time-tested techniques. I'll probably get up on stage, introduce the guy, and maybe talk a little bit about what we do, time permitting. So come on down, say hi to us, folks. We're going to be there next, next Thursday, Friday, Saturday. I have a flight back. I'm not sure I'll be there on Saturday, but Thursday and Friday, we will definitely be hanging around the booth. Look for the Eagle Financial Publications booth. You'll see us down there. Another announcement here, folks. SPY on the Market is our weekly newsletter that goes out every Thursday. It just falls into your inbox. If you subscribe, all you have to do is just go to the website, DayTradeSPY.com. And when the little pop-up comes up, leave us your email address, and you will get the SPY on the Market hot off the press every Thursday, hot off the press. It is so hot, I can't even touch it. Okay. And every week it's new, and it's actually pretty cool. It's very brief, just a 2-3 minute read. It's only well, they ask for 750 words. That's what I give them every week, 750 words. Just a 3-minute read. It's very light, relevant, entertaining. And yes, there's a little bit of promotion involved in there, but this week's topic is going to be good faith violations. Good faith violations. You want to avoid these, folks. I'll tell you a bit later how not to get them in the SPY on the Market newsletter. Right. By the way, if you want to go to some of the older newsletters, all you have to do is go to our website, which is DayTradeSPY.com right here. And up in the top left where it says SPY on the Market, click on that and go to newsletters right there, and you will find all of our previous newsletters, and actually they're pretty good. I was talking to this gentleman the other day, and he said he got so excited when he saw these. He was on there for the first time, and he's gone in there and he's printed them all off. He's got them in a binder. He said, "Oh, that's pretty cool. Thank you for that." I think there's like 55 of these things or something already. One a week, you get one a week. This one's actually pretty cool. Day trading is sexy. You want to look at that one. What else do we have here? Let's just kind of go back here. Coming from the aviation world, folks, I make some references to the aviation world. There's the I'm safe reference there. And what else do we have to show you here? Oh my gosh, it goes on and on. Here, this is a good one here. Why they don't teach this in school. So you can see some really interesting things here. And there's a real reason why they don't teach options trading in school. I get this question every now and then. Well, gee, Hugh, if it's so good, how come I don't take any courses in school? Well, you'll have to read the newsletter on that one here to find out. Okay, this is also good too, the morality of trading. Lots of great information here, folks. Lots of great information here. Introducing SPY signal for the active trader. You'll want to get it on that one. Anyway, check them all out, folks. Check them all out. Again, 3-minute read. If there's 50 of them, what are we talking about? 150-minute read. 3 hours, you'll get them all. All right. Subscribe. All you have to do is go to the website, DayTradeSPY.com. One more announcement before we get into the activities here tonight. There's going to be no trading room this Friday, October the 18th, because we're going to be at the Orlando Money Show. Instead, all right, subscribers, we are going to extend our sessions the following Monday and Tuesday. So we're actually going to extend our sessions. I'm not sure we'll go till probably 11, maybe 11:15, 11:30. We'll see how things go. Okay. But that's what we're going to be doing. And if you are in the Orlando area, please drop by and say hi. All right. We'd love to talk to you. We'd like to meet some of our clients here. So, all right, let's get on with the week in review. This is what happened last week. As you can see, the chart, we carved out another new high right there. And let's just expand this over here. Just pull it over. And let's take a look and see what happened on Monday. It was a no news day, but Wall Street was a little bit rattled with inflation worries, Middle East concerns, and of course the contentious presidential elections, and throw in Hurricane Milton there as well. And the market ran down here, found a little support down around that 566, 567 level, picked it up in pre-market. The next day on Tuesday, we had again another no high impact news day. Mostly technicals kept us at bay around that 568 level in pre-market. Then the bulls woke up, folks. They took the markets higher, rather high, to test 572 on Tuesday. Bounced around in pre-market. The FOMC meeting minutes were released on Wednesday at 2 o'clock. We had record highs on the S&P 500 as they came back up there. The funny thing about these meeting minutes, there's actually no news, but what they do is they discuss the reasoning behind their decisions. And usually around the meeting minute releases, you get a lot of these Fed members on the speaking tour. So you'll get several of them every day for the next little while discussing the meeting minutes and where the Feds are looking to take this. All right. Thursday we had a little bit of a chart pattern here, a little bit of technical trading that came down, inspiring CPI numbers, however, and unemployment claims kept SPY high over 576. We thought we might see a bit of a pullback here on Thursday, but it was kept at that lofty level, right around that 576 level. And on Friday, record highs once again. SPY ran up to 580.33 in late afternoon trading on a lower than forecast PPI number, producer price index number, confirmed that inflation is on track. And we wrapped it up right there with record high, again, just around that 580 level. Okay. So that's kind of a cool, cool event. So what exactly happened last week in review? It was we marked the second anniversary of the current bull market. S&P rose about 6% since 2022. I believe that is actually wrong. I think the answer there is supposed to be 60%. Let's pull that up. 60% since 2022. All right, not 6%. We don't get out of bed for 6%, folks. Fundamentals still strong, but slowing. So the good news is that they are still strong. The bad news is that it's kind of slowing down a little bit. That's fine, though. That's fine. We're still heading to the upside. September inflation is a little warm, but the Feds are still committed to continuing their easing campaign. Let me just see why. I have a typo in that one as well. Let's go back there again. They're going to anticipate quarter point rate cuts the next couple sessions, probably about another half point between now and the end of the year. All right. Valuations have limited room for further increases. So earnings are going to have to carry the load. And we are starting our Q3 earnings season right now as we speak. All right. This is what it looked like here. You can see on the chart here, we've hit that 60% mark in 2022. The last 2 years ran up 93% each of, actually, I should say that 20. These are the bull markets as of, let's go back to that for a second. Oh my gosh, there we go. The bull markets here in the first first 2 years of a new bull market. Back in 2009, 2020 ran up to 93%. This year, we're up over the 60% level. You can see how this is what happens in a bull market. The markets really push up nicely. I'm not sure when we're going to see a bear market again, but we'll see if next year is going to be any different. I don't know. I don't think so. Depends, of course, on who's going to be the president, right? Here's what happened. The S&P went up 1.1% here this last week. Year to date, folks, almost 22%. The NASDAQ is over 22% year to date, and the Dow is just under 14% year to date for 2024. Looking like another excellent year if you're in the markets at all, longer term. Let's take a look at the seasonals, folks. The seasonals, this is the seasonal chart. The blue line is where SPY is today, right now. And the red line at the bottom is the composite of the last 5 years closing price on the daily chart. Okay. You can see as we're heading into the end of the year, we're starting to pull it back up. A lot of bouncing around the way along the way there, but looking like it's going to be a bullish kind of a market. So let's just drill down into what happened here. If you look at it historically, SPY rose about 6 points over last week, and seasonally, SPY actually dropped about 3 points the following week. Not that it's necessarily going to happen again, but just something to keep in mind that we may see a bit of a retracement next week. We're going to see where it takes us. Okay. Coming up as far as next week, the week ahead, let's take a look. Forecast calls for low no news day on Monday, a bank holiday, which is actually important, and I'll tell you about that in a few minutes. On Tuesday, we've got the Empire State Manufacturing Index, also known as the New York State Manufacturing Index. Earnings include Bank of America, Goldman Sachs, Citibank, State Street, United Health, Johnson & Johnson. Wednesday, another low, no news day. We got earnings from Abbott, U.S. Bank. Who is coming up here? Kinder Morgan, I think it is. Let me take a look here. Let me see who else do we have here. I've got two screens on the board. I'm trying to pull up this other one here. Las Vegas Sands. These are the names. Now, in and of themselves, they're not going to move the markets, but nice to see where, well, we'll see if in aggregate, are they pushing the markets up, or depending, of course, on what the numbers coming as, right? Thursday, we've got retail sales, unemployment claims, Philly Fed Manufacturing Index, and earnings include Morgan Stanley, Netflix. And on Friday, we've got housing starts, building permits, and earnings on Friday from Procter & Gamble, American Express. Let me see. We've got earnings from Schlumberger or Schlumberger, however you want to pronounce that. And also Fifth Third Bank. That's coming up on Friday as we head into earnings season. And that traditionally earnings season tends to push markets higher, but I am a little bit concerned about that seasonality of it that we just saw how historically over the last 5 years, SPY actually lost about 3 points in the coming weeks. So we're going to wait and see how that works out. So anyway, Q3 earnings season is getting underway here as we just start the season. Actually, just last Friday, a couple days ago, we started with the banks, and let me see who reported already last Friday. I think it was let's go back and see. I'm not really sure who reported already here. I mean, it doesn't matter because Friday is gone, right? So we're kind of JP Morgan, I guess, Wells Fargo, Progressive, BlackRock, Bank of New York Mellon, they all reported on Friday. And apparently I think the numbers were pretty good too. So all right, that's the week ahead. Good to know that. The bottom line, folks, volatility could be low on Monday and Wednesday, moderate on Tuesday, elevated on Thursday, and back to moderate on Friday. We recommend here that, well, expect markets to be choppy into the elections, and the Middle East tensions do not help matters, let me tell you, with all the activity going on over there. So our recommendation is trade small, trade often. All right. Don't get greedy. Just get in, make a few bucks, get out. Get in, make a few bucks, get out. Those little gains do add up very, very nicely. All right. They do long-term add up very nicely. You get into something long-term and the thing turns on you, you could be left holding the bag on some really nasty trades. So you don't want to do that. You always want to kind of just make a few bucks and just keep adding it to the pile, right? Folks, many opportunities daily. Daphne over here, she's our gal of the Day Trade Spy here. She finds the trades for us. She's come hither, trader. We'll show you how to spot them and how to trade them. All the opportunities. That's what she does. All right, let's take a look, folks, at our 2 to 5K challenge. This is exclusively done in our trading room. Every morning, we talk about the 2 to 5K challenge. It doesn't cost you any more to do this, but you must be in the trading room because that is where we do this, in the trading room, okay? So here's what we did here. But before we get into what we did, just want to tell you, for those who are new to this, our goal is to turn $2,000 into $5,000 and in a little under 2 months. All right. September 16th to November the 5th. What is that? Is that about a month and a half, maybe a little more than a month and a half? And again, we do it live in our morning trading room. Every morning we do it. Okay. Here's the numbers. I didn't go from the start, but just kind of picked it up here from September the 27th, last couple of weeks. We right now have this is what we have to work with here. Excuse me. $3,535. That is the balance with which we have to work with. So we have less than $1,500 to go in our quest to turn 2,000 into $5,000. We are well on the way. We're actually $258 ahead of our budget. So according to this model, if we don't trade for the next 2 days, we are still ahead of the game. Tomorrow morning, our target profit is going to be $82. And this is the way it looks. That red line is where is our actual balance. And that blue line in the graph, that is actually the budget. Okay. So that's what that is. So we're ahead of the game, and as long as we can just maintain our status quo on this, we should be fine, and hopefully we'll come in slightly in advance of the budget. So again, if you're not part of this, you probably might want to be. So here's some rules that we're using. Now, by law, we have to use a SIM account, but we're looking at it as if it's a cash account, so that if you are new to trading, you don't have a margin, you don't have a lot of money, this is still something you can get in with, right? Again, we're looking to finish no later than November the 5th, starting with $2,000. Goal is to ramp it up, buying both calls and puts, although I do have a bias and I favor calls, okay? But if the put situation presents itself, we won't hesitate to take some puts as well. Trade only what is available in the cash account. We do not repair these trades, so we have to be right, okay? We have to be right. And again, it's not like a marginable account. It's in a cash account. Essentially, we're given one trade a day. All right, see how much money we have to work with. That is the trade. We always have to wait until the account settles the next day, which is what we do, and then we can trade the next day, right? So how would we get in on this thing? We check the fundamentals, spy on the technicals, breakouts, chart patterns. These are the things that we look at. All right, I like to trigger on the 1-minute chart and exit with reasonable gains. So what we do is we take a look and see our target price and divide that by how many contracts we have. And that is what we expect to make per contract plus a point for commission. And sometimes try and squeeze another penny or so to get ahead of the game. It's actually quite a lot of fun, and it's been working extremely well. Another thing I like to do is like to check in with Aaron. All right, check in with Aaron for his deep dive analysis. He likes to dig deep into the charts and determine, well, look out for the danger zones, right? He's got like those night vision goggles. He likes to see down the road, where maybe I might not see something. He might see, well, I don't know, Hugh, be careful. There's some strong resistance coming up, and we might see some bounce up around that level or whatever. So it's actually very nice to know that. So we do check in with him before we jump into these things. So then we, of course, make the decision whether we go or not, right? And sometimes we do, sometimes we don't. So objective is to close all positions by 10:30, but we might hold overnight if the trade requires us to do so, right? And of course, folks, the bottom line is there are no guarantees with anything. No guarantees with anything. Again, the 2 to 5K challenge, join us in the trading room for that. Trading room, what's this trading room all about? Well, let me explain the trading room for you. It's hosted by yours truly. My name is Hugh. And Aaron, we have professional experience. In fact, we are combined over 40 years of market participation. And I really like to stress that I really wish that I had a Hugh and Aaron to teach me this stuff back when I was learning all this stuff, because I can assure you I would have saved myself so much money, losses and aggravation, frustration, and time and effort. And I'm pretty confident we'd have been a lot further ahead of the game. But you know what? You learn from your lessons. And this is one of the things that I had learned over the years too, is that I would always, pardon me while I have a drink here. My throat is actually very dry here from talking earlier today. I was out with my daughter, had a good time. Anyway, which is really unusual because usually I have to listen when I'm with my daughter, because she does the talking, right? But we had a pretty good session. We had a pretty nice session. We had a pretty good time. Anyway, what was I going to say here? When I learned this stuff, and I'm always learning. I want to stress that I am always in a learning mode. All right. Um, I find that you learn best from your mistakes. All right. And celebrate the wins. Absolutely. Celebrate the wins. When you have a winning trade, absolutely celebrate. But when you have a losing trade, go back and review the trade. And I trust you're keeping logs. That's one of the things we talk about. I think we might even have a newsletter on that. I'm not sure. We'll have to check on that. But when you have a loss, you should always go back and determine, okay, so how is it that I thought this was a good trade then, and now suddenly it's not? What changed? Now, maybe the market changed. Maybe your perception of the market changed. Maybe you missed an indicator here or there. Maybe you got aggressive. Maybe you got a little scared out. Maybe you jumped the gun. You weren't patient. You weren't disciplined. Yeah, there's a million reasons. And in your log, all right, in my log that I set up, I have a column for details, comments, and I like to write in there any weaknesses that I may have come across or determined that I had challenges with the trade. Even if I had a winning trade, but if it was a challenging trade, I'd like to note that and see, okay, what happened? Was I too aggressive? Did I jump the gun? Did I go in too heavy over my risk tolerance? There's a million reasons. So the reason I say that is because if you log and note and log your losers and your challenges, I shouldn't call them losers. They're not always going to be losers, but any of your challenges, um, and if you try to make less mistakes, all right, and eventually if you stop making those mistakes, you'll find that the only thing left is to make good trades, and you'll see your fortune suddenly turn to the upside, right? And that's kind of the idea. So over the years, that's kind of the way I learned and how I've been doing things, and it's been working pretty good so far. Knock on wood. 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 We have a lot of fun in the trading room, folks. It's interactive, much like this session here. You put your comments in the questions box, and Aaron and I are the only ones to see that. So go ahead and say whatever you want. We like to answer your questions. And when people chime in with their wins, we celebrate with them with the sounding of the bell, right? It's actually pretty cool. We have a lot of fun. It's a learn and earn session. These are not, oh, watch you and Aaron trade sessions. That's not it at all. These are actually learn and earn sessions where you're actually there to learn everything. And if you have any questions, obviously that's where you ask them. I remember several years ago, I had this one gentleman. He just started as the funniest thing. Great guy, but he was very shy. And at the end of every trading session, he would email me a list of questions. In the first few days, of course, I diligently answered them all. And then I realized, whatever his name was, Stan or whatever, I said, Stan, you actually have to ask these questions in the trading room. We can't be going back after the fact because, frankly, when we're done with the trading room, like we're kind of done. You know what I'm saying? That I don't want to go back and review all that at that time again. I was just there, So we're kind of done. So ask the questions in the trading room. Well, I'm shy. Well, that's the whole objective, and that's why we don't display the questions. You're not displaying your questions in front of the audience. You've got nothing to be ashamed of. And the only dumb question is the one you don't ask. There's no such thing as a dumb question. Now, if you're going to ask me what are calls and puts, I will suggest that we take that conversation offline somewhere, right? But that's sort of the criteria. If you know what calls and puts are, you should be in the trading room because that's really where all the action happens. We trade what we teach. We trade what we teach what we trade. That's where strategies come alive. These are also recorded because a lot of people can't make it for the trading room. So we record these, then they go back after the fact and review them. Every morning, folks, we do this 9:20 to 10:30 Eastern time. Now we do get online at about 9 o'clock, and you're going to hear music. And that's not just to entertain you, that is to make sure that your audio is alive and well. I don't know if you've ever been on any of these webinars where they spend the next 10, 20 minutes. Oh, can you hear me? Can you hear me? Check your audio, check your speakers. We don't go through that. All right. We want to start kind of on time, you know what I'm saying? And if you can't hear us, well, I don't know what to tell you. Check your software, hardware. But that's the purpose of coming on early to make sure all of that works. If it doesn't work, check your speakers, check your software, check everything, make sure everything's plugged in, right? Every day, 9:20 to 10:30 Eastern time. It's also the home of our highly acclaimed 2 to 5K challenge, which I just told you about. The cost for this, folks, is $6.99 a quarter. And there's a little catch to this thing here. The catch is that if you go to our website, I think it costs more. So the trick here is to email, all right, email customer service at daytradespy.com and ask for the special price for the trading room. In fact, all of our services are like that. All right, you can go to our website and I think you'll pay full retail price, which some people do. All right, the ones that don't come out of the Sunday night session here. So there's some real value to these Sunday night sessions, as you can appreciate, because this is where we give you, tell you how to get special deals, right? So what you want to do is email customer service, all one word, customer service at daytradespy.com and ask for the special prices on whatever services, including the trading room. And here's the cool thing about it: if you really don't like it, if it's not your cup of tea, or you don't understand or whatever, you get a 14-day money back guarantee. How cool is that? All right, how cool is that? All right, that's the trading room. All right, to give you an example of what people say, these comments came in. And I'm not going to go over the many comments that we get, but I really liked this one here to the point where I thought I better post this one here tonight. Hugh, there are a lot of trading pros with all the right answers. None of them comes close to matching your ability to help teach and make us all good traders. Thank you for being the best for the benefit of your followers. And then we get people chiming in. I mentioned how people chime in. Here is Atiba, just made $164 on the pick of the day. Super excited. You guys are awesome. Akhtar also picked up 28 cents on the pick of the day. By the way, that 28 cents isn't like 28 cents, like buys you nothing. That's 28 cents on an option, which is a lot of money. All right. If you have 10 contracts, 28 cents means $280. All right, $280. So that's kind of what that's all about. All right, so why trade SPY options? A question I'm asked. It's highly diversified, covers all market sectors, highly liquid. The fills are quick. By the liquidity, with this high liquidity, that means the bid-ask spreads are nice and tight, and that's kind of what you want. You don't want to get into an option where you've got massive bid-ask spreads, low liquidity, low volume, nobody's interested, and nothing's happening. It's kind of like a roach motel. You can get in, but you can't get out, right? You don't get that with SPY. SPY is the highest traded stock out there, ETF, exchange traded fund, and pretty well anything you throw at it, it can handle. You got $1 million you want to trade on options, it'll handle it, not a problem. What I like about SPY is it's relatively predictable and also relatively forgiving. So even if you make a, kind of a short-term mistake, perhaps, just kind of hang on for a bit. Chances are it'll come back in your favor. I'm going to give you an example. A couple of weeks ago, I was so angry at myself, so angry at myself. I went out on the limb. I was so confident, overconfident. I bought some call options on same-day expiration, something that I actually preach against. But I was so confident, well, I'll take the high risk. I'll make some serious money on this trade, no problem, right? So I bought a bunch of call options. I think I paid 94 cents or something for them. And then that was in the morning. And then later on in the afternoon, around 2, I want to say 2:20, 2:45, something like that, the market just tanked. I got so annoyed at this stupid trade that I had on. I just took 20 cents. Just give me the 20 cents. I'm out of here. I was just so mad. So I lost a little bit of money, right? And then to get burned twice, right? It's human nature to continue watching it, right? Even after you sold it, it's no longer yours, but you still continue to watch it, right? I'm watching it, and I thought, oh my gosh, had I waited 15, 20 minutes, guess what? This sucker shot up to $1.47. So I was right the first time, and then I just lost my confidence and I sold. And so you can see how SPY is so forgiving, and I should have actually stayed with it because I kind of knew better, but I let my emotions down and it got the better of me. But I'm okay with it. It's really not that bad. What I like about SPY, it's affordable. And it's just simply the best tradable instrument out there, especially if you're new. Now, if you are new, you really kind of want to get sort of the best stock to trade. Um, and um, and you don't want to get into, there's a lot of stocks out there you don't want to get into that are they're just bad news. Um, penny stocks are such. As new traders, and I'm sure there's some news traders online here, you'll be tempted to get into the penny stocks because they're cheap, right? Well, I got to make some money on penny stocks because that's all I can afford. That's just a false economy. And we're probably going to have a newsletter on penny stocks and why to avoid penny stocks. I don't know if I had a newsletter on that. Maybe I do, but just, Google pump and dump. That's a good start. You don't want to do that. Folks, yeah, it's if you don't have a lot of money to trade, put it in your account, paper trade, paper trade, paper trade. Even if it takes you half a year or 8 months or 12 months, just slowly accumulate your trading account. Then when you are ready, you're going to trade that quality stock that's going to make you money. Okay. I think it's really important to get into quality. So here's what happens. You're so anxious to trade, you throw your good hard-earned money into the thing, you lose your money, and then you get so upset about it all, you leave the whole business. You don't want to trade anymore. And that's why they say, and I don't know what the numbers are. I've heard everything from 95% of traders, they stop trading. Options and futures traders stop trading within the first year because they blow up their accounts. They lose their money, they blow up their accounts, they go back to doing whatever they did before. It doesn't have to be that way. So we like to be part of the 5% that makes money. And I think there are a lot of people on our chat lines in our various programs in the trading room that aren't making a lot of money on this. So anyway, questions. Let's get to questions here. Okay, is your Friday put call trade still working? Is your Friday put call trade still working, or is it dead? I don't know what the put call trade is. I don't believe I'm in any trades on from Friday, Gerald. Gerald, um, are you talking about if you're talking about the pick of the day? Believe it or not, that was a put. It was based on certain technicals. We did talk about it in the trading room, and we talked about cutting losses on that one. Okay, that was not a okay. So the powers that be with Eagle, they want us to close our positions at the end of every day in the trading room. So we just put in a stock, no pun intended, 40% stop loss, especially for the newbies. Does not mean that I would do that. I'm not a big fan of stops. I would hold overnight and repair trades later. Okay. But for those who have to have a stop, we'll say, okay, put a 40% stop. So anyway, I think that may have been stopped out if I recall. Quite honestly, because there's so many trades floating through our minds all the time, and as soon as we sort of close them off or move on to another trade, we kind of forget about the trade. So, how do you pull up the chart for an option on Think or Swim? Think or Swim. Okay, so I don't have Think or Swim open. Do I? Maybe I do. No, I do not. So I don't want this to become a lesson on learning how to think or swim. But how do you pull up a chart? Okay, so uh, when you pull up Think or Swim up at the top, you'll find different tabs like equities or stock. I think it says equities, futures, or maybe it doesn't even say futures, it's options, whatever. It'll say charts, pull up charts. Let me just do something. Maybe I can actually pull that up here. Bear with me and I will see if I can show you on that, Mark, because are you in the trading room, Mark? If Mark J, if you are, you will know how to do that. And this session is not really designed to do this, but if I can just really quickly answer that one question, and then move on to other questions. It's going to take a little couple of minutes here, maybe not that long to pull up Think or Swim. And I'm going to go on to the next question while I'm trying to get Think or Swim up. What are the indicators that you use for the pick of the day? Charles, if I tell you that, I got to kill you. I don't want to do that. That's a secret. Okay, we have our unique indicators. So what happens with the pick of the day? Aaron and I, we do consult every morning, and sometimes we actually argue about it and discuss things. And sometimes he relinquishes, sometimes I do. A lot of times we're not in, not a lot of times, but sometimes we're not in agreement. But but most often we are. Okay, and then we will determine, okay, what direction are we going to go? What are we going to do? So that's how we determine it. But there's a lot that goes into the pick of the day analysis. All right. And again, I'm not gonna reveal that. That's something that we keep close to our chest as to what we use to determine the picks of the day. All right. And that's why it's a subscription service, because you're paying for that knowledge and experience and all that stuff. So, all right, some more questions here. All right. Okay. All right, Doyle. Okay. Let me take a screenshot of your comment here, and I will send that I will rattle the chains of somebody higher up and get things rolling here for you on that. See what happens on that. Okay, Doyle, I know you have a little issue contacting whoever you need to contact to get moving on that. You should not have that issue. So I apologize for that. About I will see about getting that taken care of for you. And meanwhile, I am going to just move this over here and kind of get things set up here for your Thinkorswim, how to get the charts up. All right, so let's just do, okay, let me see if I can just bear with me here while I reload this. And I'm going to just show you real quick how to bring up the charts with Thinkorswim. Okay, set up. Okay. Charts. Okay, so you're going to see charts here. You're going to see, this is not a tutorial on setting up Thinkorswim, but I'm just going to show you how to bring up Thinkorswim charts. Up here at the top, you got monitor, trade, analyze, scan, market watch, all these. Go to charts, and we bring up, there's three over here, flexible, grid, product depth, charts. The one on the left, pull that up. Pull up the symbol up at the top left, click on SPY, and you will get the chart of SPY. This is it right here. And I am going to actually remove some studies on this particular one here, so that I'm going to show you what you're going to see actually, and apply this. So this is what you're going to see, something along this line, okay? But that's the long and short of it. Just go to charts over here on the left, and make sure you put in the symbol SPY. You're going to get the charts. Again, this is not a tutorial on setting up Thinkorswim, but I think we had one not too long ago. If you do want to learn all about Thinkorswim and setting up charts, we actually have an excellent workshop on that. If you go to our website and you go up here to the top, where is it here? To the top where it says online workshops. If you want greater detail in that, this is actually a real bargain. Setting up Thinkorswim charts workshop. It's only $249. Get this, you're going to download this webinar. I think it goes for about 2.5 hours. Or is it an hour and a half? I can't remember. But it's very comprehensive. And it'll tell you, I think it's about an hour and a half, actually. I don't think it's 2.5 hours. It's not that. We're not going to torture you that long. So, but that's the place to go for that. Okay. Let's get some more questions, because I got a feeling we're going to run out of time here. All right. Okay. Benjamin. Okay. Yes. Right. Did I meet you there? Did we meet you there the last time? I don't know if it was in Las Vegas or Orlando. I thought we might have mentioned there. So welcome, Mitzi. Welcome, David H. New to the webinar, experienced traders. Can you tell us a little bit more about the SPY signal? It is a different service. So we've got a couple services for trades that we suggest. All right. So the signal goes to your cell phone as a text message, and also your email whenever certain parameters set up, very unique parameters. And the idea there is so if you're working or you're driving somewhere, and this comes in the mornings, you're not going to get them in the afternoon. We send out 3 to 5 signals a week. It's kind of an easy sort of a trade. Very, very reliable. It has an excellent record. So you as soon as you get the signal, you would buy that particular option within the 2 minutes of getting the signal. Put up for 5% profit target. Okay, and if you don't sell it by the end of the day, sell it at market close. Okay. Now in our trading room, if you happen to be in our trading room, we show you how to get a lot more than 5 or 6% on our trades. We show you how to do all that, but we put in that 5% as just as a measure of success. Okay, and it's been working very well. That's the signal. Now the pick of the day, a little bit similar to this, because what we do there, we email you a particular option that we are interested in trading. We email you that between 9 and 9:30. See, the signal, you're going to get it in more real time, live time. Okay. Whereas the pick of the day is sent to you before the market opens. And the pick is designed to be purchased at market open. All right, then there's some rules with that. So the pick is you want to wait a few seconds for the bid-ask spread to settle it nice and tight. And then if the stock is going in your direction, you buy right then and there. If it's going against you, you wait until it turns around on the 1 minute chart, then buy when it's going back in your direction. Put up for sale for 6% profit target. If you need to hold that overnight, that's fine, because these picks are designed to have plenty of time with them. So, excuse me. So they don't need to be closed out at the end of the day. Okay. Now, again, in keeping with the policies of the our bosses, we do suggest a 40% stop loss for those, especially if you are new to trading, in case you get really panicky and worried you don't know how to manage the position after market hours. Okay, so that's kind of the way that works. So, all right, why not Zoom Aaron's talk since not everybody can make it? I'm not really sure if we can Zoom. That's some good idea, isn't it? I'm going to see if we can. Ira, that's a good point. So Zoom's Aaron's talk in Orlando. I'm going to see if we can get a camera up there and zoom it out. That might not be a bad idea. But I don't know how we can. I don't know if that's feasible or not. I think it's a question of getting the manpower behind us on that one here. So, and yes, we will still be doing the pick of the day while we are in Orlando. Not a problem with that. Um, there will still be a pick of the day on the Friday. Absolutely. So, all right. And thank you for that, Ira. Thanks for your comments. Uh, Question here about I mentioned I prefer calls versus puts. When the signal comes in daily and put is indicated, however, call in the same conditions appear more advantageous. I feel compelled to stay with puts, overriding my gut to do a call on my loan. Okay, so the question is, I guess the question is the questioning my bias towards calls. Now, every trader is going to have their own nuances with their pet trades, their demons, whatever you want to call these things. I always found, not always, but too often when I go back into my log and I check to see where my challenges were, they always seem to come up with the puts. It's actually uncanny that probably 90% of my challenges in my trades are with puts. Now, I have made a lot of money on puts. I'm not going to kid you, And when the market is clearly tanking and all the indicators are going to the downside, yes, by all means, do the puts. Do the puts. But what I noticed is if you leave markets alone, if you don't, sorry for being crude, but if you don't piss them off, the market likes to go up. It just likes to go up. During the Trump years, we had 126 new record highs on SPY. We had, we have earnings pushing markets up. We have a lot of good reason to believe markets like to go up. With the on the threshold of more rate cuts coming up, possibly in November, another quarter point. That's anti-inflation. That's good for the market. That's good for the market. Seasonals generally like to move markets up this time of year. Yes, we have some bounce, but and that is kind of the reason. Now, again, if you see it very clear, move to the downside, breaking support after a big run up, and by all means get into puts, and I would too. And thanks for thanks for that, Atiba. So you're the man. Uh, you're the woman. All right. Yeah, you Atiba and all the others in our service are the reason we do this. I was talking about this with Aaron the other day, actually online. You probably heard this. We don't actually have to do this anymore. Aaron and I know how to make money for ourselves, but we enjoy teaching people. It's kind of like a social life, you know what I'm saying? Uh, I'm sure I have more online friends, if you want to call it that, than real friends. Uh, you know, your real friends don't always trade, right? They're not traders. They do other things. But and I've got pilot friends. I've got different friends, different. But anyway, you guys are the reason we get up every morning and we do this because we just really enjoy passing this amazing knowledge on to you guys. So, is SPY better than SPX trading, Michael? I like to think it is because SPY has a lot cheaper, a lot cheaper. A lot more people can get into SPY trading. The options are much cheaper, unless you want to pay like $1,500 for a single option. That's a lot of money. Um, and so I think there's a lot of benefits. SPY is the stock that follows the top 500 stocks, which is the SPX. Now, if you're trading millions and millions of dollars, yeah, you might want to go with SPX. I don't know. But I find that the volume is there with SPY. Everything is kind of there with SPY. So, last week's put trade, still stay with it, Raj. I would check in the trading room tomorrow to see what Aaron says in the long-term projections on those puts and looking at the seasonals, how it went down in the coming week, 3 points. There might be a case for holding on to those puts. Okay, and for anybody else who's held those. And I see it's 8:58. Okay, come into the trading room here, guys. Santiago, how many contracts recommended? Okay, so everybody's got a different threshold for how much to trade. Just kind of reading when you write essays, it's tough to read, Um, did it call us to the puts? So market's mostly green, all talking heads where we're at, I don't listen to talking heads. They listen to us. Best day so far. I took the call at 6:50. Good to see that, San Diego. So how many contracts do we recommend? That's a function of money management. Some people 10 contracts is a lot for their budget. Other people 10 contracts is a drop in the bucket. Okay, I know people who trade a lot of contracts and other people who trade, 2 or 3 contracts. So it's whatever you are comfortable with, and that's a whole money management issue, which we're not going to. That's another uh, trading room session where we delve into that in a big way. Oh, Odell, good to see you on, Odell. Long time no hear from you. Where have you been? Rules for the signal. All right. As soon as you get the signal, it's triggered as a text message on your cell phone. I believe an email goes out as well. Buy the option right away within the first 2 minutes. Just buy it. Immediately put it up for sale for a 5% profit target. And if it's not sold by the end of the day, just exit at the market price. Okay. Now, if you see it, of course, going your direction in a huge way, write it out a little more, right? Get more than 5%. That's just the threshold that we use to measure success with which to hold on to. So, right, David H. First week pick of the day, 2 winners, 3 losers. Losers, no. Do you publish your trade fills? Yes, we do. In our inner circle, every day we talk about the trades that we had done. All right, so you may want to consider if you're not getting the results of our trades, you may want to consider joining the inner circle because that's where you get the follow-up report every day as to what we did do. Okay. And I'm wondering if you executed poorly on that. Um, David, we might want to, David H, if you can come in, if you can join us in the trading room. I mean, okay, so the pick of the day, that's really designed to be trading the first little while. Um, but if it's going against you, hold off until the market turns back in your direction, then get in. And if you can get into the trading room, we can discuss that in greater detail. Okay, so the question here, the chart for the specific. Okay, I see what you're saying here. Mark was saying about the chart. How do you chart the option? I'll tell you that. Sure, I'll tell you that. Okay, let's go up here. If you want to chart an option on Thinkorswim, up here at the symbol, all right, you see where it says symbol? Here's how you do it, folks. This is actually really cool. You can actually chart the option. Now, the option chart gives you an historical record of the stock. Do not engage the indicators on the option. They don't work for the option. Any indicators you might use, but here's how you do it. Up in the symbol, you start with a period, and then you put the stock name, in this case SPY, and then the expiration date starting with the year. So let's say 24, first year, and then the month, say the month is the 10th, which is October, and then the day, so let's say the 18th, which will be next Friday, right? Year, month, day, and then C for call, P for put. Let's put C, and then let's say, I don't know, what would it be? I don't know, 579 strike price. You put the strike price, right? So period, stock symbol, expiration day starting with the year, month, day, C for call, P for put, and then the strike price. Then you hit enter, and then this gives you the chart of the option itself. And you can see, right, how the option moved. Now imagine this here, you got it down here somewhere. Let me just kind of pull this up. And using our indicators, you could have followed along on this call. Let's say you got this call somewhere around $3 and you wrote it up to say $4. You just made 33% from 951 to 1011. Where else are you going to make 33% in 20 minutes? Right? If you put in $6,000, you'd have made $2,000 profit, and that's just the way it works. So that's a quick. That's a. I was going to say that's a tutorial for tonight, but it's not. Let's move along here. Here is our 2-minute tutorial. Watch for banking holidays. This is important because equity markets could remain open, right? But the banks are closed. Why does this matter? This affects your settlement dates. So if you're in a cash account, right, and you trade your account, and then the next day it settles and you can trade again, right? So let's say you have $5,000, you traded $5,000, you trade your whole account, you're waiting for the next day to settle for $5,000, and then you trade the next day, being tomorrow. You're going to get good faith violation. Why? Because it did not settle. The settlement dates happen with the banks. All right, with the banks. So if there's a banking holiday, all right, you don't want to trade if you're in danger of getting a good faith violation. So make note of that. And there's a couple of days, I believe, tomorrow being Columbus Day. That's one of them. And Veterans Day, November the 11th, is another one. Right? The markets are open, but the banks are closed. And if you trade those days and you're in danger of extending your limit on those, you're going to get a good faith violation. So what does that mean? In fact, we have a newsletter going out on that very thing. If you get, I believe with Thinkorswim, it's 3 good faith violations in a 12-month rolling period, they're gonna, slap you around and make you sit in the corner sitting on your hands in the corner for 3 months. I believe with Tasty Trade, you get, I believe it's 4 violations you can have in a 12-month rolling period. And the next one you get, that's it. You're suspended for 3 months. You can't trade. Okay. You can close out if you're holding any positions, you can close those, but you can't execute any new trades. So you want to keep an eye on that, right? Again, watch for banking holidays. Tomorrow is a banking holiday. All right. Being Columbus Day. So Columbus Day and Indigenous Day, right? All right. Well, let's see any more questions here. Okay, thanks you for that. Waiting to leave or adjust my day job in order to subscribe to the trading room. Mark, that day job gets in the way, doesn't it? We hope someday that you actually make so much money trading that you can actually leave your day job. That's actually what happened to me. It's actually pretty funny because as an internal auditor, of course, I had to have a 9 to 5 job basically, and I'd go and I discovered trading and I'd be in front of my computer looking at markets. Now, I'll be honest, I didn't know nearly as much then as I do now, but I'd be looking at the markets here instead of actually working. You think that my boss would have come down on me, but no, he spent his time in my office, as did other people as well. And and of course, we're watching the markets instead of actually working. Then around 10, 11 o'clock, I think we better get to work, you know. It was horrible. But I started making some pretty good money on the market back in those days. And to the point where, hey, I said to my boss, Don, I'm going to be honest, Don, I'm not excited about work anymore. And I am about trading. I'm making more money trading than I am working. Uh, and even, my mind's not there anymore. I lost the soul of my job. And when it gets to that point, I don't feel like I'm doing my best, and I think I'm going to quit. And he said, yeah, I can see that. And by the way, my boss, Don, he also quit a few months later. So trading has this effect. Anyway, good luck with that, Mark. Okay. All right. Question here. Your pick of the day ranges from 3 to 9 days till expiration. When I go out one more week and use 10 to 17 days till expiration. Less data loss. Good question. But when you have less data loss, trying to make that percentage gain can be a little more challenging. So there's a risk reward balance in there we found. Further out, yes, we'll give you, but the option may not move much. So if you're trading an option that might cost you $6, $7 versus $2, $3, trying to get that 6%, you probably usually get it, but not always. It can be challenging. We just found that's the best reward risk to reward ratio. That said, maybe we'll take a look at do some more studies on that. The studies we had done on that days to expiration was done was done years ago. So maybe we should look at that again. Zero date expiration is kind of an interesting one. Zero date expiration, I'm not a big fan of, although I've made a lot of money on it. But every now and then when I go really out on the limb on that one and I make a lot of money, it's great. But I also lose a lot of money. Zero date expiration, you got to be very careful because if the stock turns against you, they take the premium out very, very quickly. And they're not very fast on putting it back in. So have a very tight stop on it if you're going to do zero date expiration. In the trading room, we don't advocate that because we're trying to get more safety in on that one. So I want to be very careful on that. So we're trying to do safer trades if there's such a thing. All right. Okay. Okay. Just some real quick questions. I'm trying to move along here because we're already 9 minutes after 9 o'clock here. Uh, how many times does SPY go make new highs under Biden? I don't know. I never checked. I remember just knowing that from a long time ago. That's interesting. That's a good question here. How many new SPY highs under the Biden administration? Let me just pull it up. Actually, that's a good question. Real quick. How many record highs for SPY under Biden? Um, okay, according to oh, I'm not sure. This is not really giving me any numbers here. I'm trying to find the current numbers. I got something here from 2021. That's not current. I'm not really getting. Let's see here. I'm not getting any current information on that. I don't know. I don't have any information, nothing current on that. Uh, yeah, I can delve into this in a big way, but I don't want to kind of waste a lot of time. Here's a comment here from the Washington Post on September the 18th. On all but 13 days of Biden's presidency, the Dow and S&P have been higher than the highest point seen under Trump. Well, that's a function. The markets continue to go up, right? So once you hit a level, they're always going to be higher, right? Question about the presidency: who becomes the president? What happens? They did studies that doesn't much matter who's the president as far as the stock market is concerned. I think it's a question of who's governing the House, and if it's a split kind of a House, not much bad gets done. The markets tend to do well. I don't know. I think there was a newsletter on that a while back. I want to move forward because kind of running out of time here, and I don't want to kind of keep you all night here. I vow to myself all the time, I'm not going to torment you for more than an hour, but but every week it seems like we go extended overtime, and I guess it's just there's so much to talk about. Folks, I actually have a hot stock tip for you. And excuse me, Aaron and I looked at this the other day. Now, we do not, all right, we only do SPY. We only do SPY. We don't advocate other stocks, but this particular one kind of jumped out at us. DJT, as in Donald J. Trump. Yes, it is his stock. I guess this is his version of Twitter or whatever. And this has been vacillating all over the place. But this thing is down around $25 right now. And we figure if he wins the election, this thing could skyrocket, probably go to $57 pretty quickly, probably even higher. Um, I bought long out November the 15th, $115 calls. I think I'm in for an average. I bought a bunch. I got quite a few in there. I bought for, I think I'm in for an average of 56 cents. We're going to see how this goes. I have taken the risk on this. And if you're so inclined, you want to take sort of a kind of a risky trade, you might want to consider something like this. And again, this is just a hot stock tip. No guarantees. All right. Maybe you might want to look at that $115 calls for November the 15th. I think if you can get them for under 75 cents, you'll probably do okay on them. Actually, I think they're going to go up quite a bit. We'll see what happens. All right. There is your tip of the day. All right, folks. If you are new to options, this is where we're gonna get a little where just kind of give you an options primer, folks. For anybody who is new to options, and I'm sorry if I didn't get to all of your questions, but any of the banks are affected. The banks for settlement are closed. All right, trading is open. Markets are open, all right, but the banks are closed for the settlement date. What are options? Options are actually contracts that give the options holder the right, but not the obligation to trade an underlying stock for a certain price by a certain date. Don't get too bogged down in the terminology. All you have to do is remember two names. They're going to be like your kids. You're going to remember their names, probably even better than your own kids. If you expect the stock to go up, you buy a call option. If you expect the stock to go down, you buy a put option. Call up, put down. All right. Options have strike prices. This is the price that's set at which the stock can be bought or sold when the option is exercised. And again, this is just a primer. It's not a complete study by any means. Don't go through this and think you're going to learn all about options. You're not. There's a lot of stuff I'm not telling you. It just kind of gives you a very, very brief overview of options. There's in the money, at the money, out of the money. We don't even talk about that here. And we talk about exercising expiration dates. Expiration date, because these are contracts, they do have an end date. You're kind of like buying an ice cube. It is going to melt on you. There are Greeks attached to options. One is called theta, which is a time value. That's how much the option loses in value every day that you have it. Options is not, as a rule, a buy and hold strategy. Options is something you want to trade, right? You want to get rid of it somehow. The expiration date is the end date at which the contract expires or it gets converted, right? Now, if you're in the money, they convert it to stock. or they can sell it on you if you're getting nearing expiration. There's a few things you can do with your options. Our objective is not to take it to expiration. Our objective is not to convert options into stock, which there are strategies to do. All right, and I'll just give you an example of a strategy. One of our cohorts with Eagle, Brian Perry, he talked actually the other day. He had a really good webinar on naked puts. Naked puts. So what you do there is you sell, and I guess again we don't do this strategy here, but you sell options and collect the premium. So in this case, you actually have the time value working in your favor. And this is actually a bull put strategy. In other words, you make money if the stock goes up or stays the same. You make money. But if the stock goes down that you buy, if the stock goes down, the value of your puts gets higher. So now you sold the premium, but at some point you either buy the put back, and the idea is to buy it back when it goes, lower, right? But if you're kind of stuck, if the stock really drops, you have to pay a lot of money to buy the option back, or at come expiration, you have to buy the stock. They convert your option into stock. As an example, Walmart, the $80 strike price, you could sell that, could have made maybe, I don't know, say $500 or something for Friday's expiration. But if it would have gone to under $80 or something, they may have put you the stock. So for every contract, you are liable for 100 shares. At $80 a share, what is that? $8,000 for, right? For for the trade. That's one option. I don't even think you would have got $500. Maybe I think the option was 50 cents. That would have been $500. So you collect $500, but now you're running the risk of taking the stock for $8,000, which is okay if you expect the Walmart stock to go back up over $8. You can always sell it. But is that what you want to do? Do you want to hold stock? And that may be a situation that you find yourself in if you're trading naked puts. So we don't do that. The way we trade, we buy first, then we sell in that order, calls and puts. Anyway, moving along here, pros and cons to options trading SPY. Pros, a lot of flexibility, cost efficient, huge leverage. And I'm going to show you that in a little bit. You don't have to buy the stock to make a lot of money. Huge return potential. Again, many strategies available. What I like about it, it's actually fun, exciting trading. I'm in and out in a very short period of time, usually just a few minutes. There are some cons, like I mentioned, the time decay with the way we trade. Commissions, of course, is one. You want to find a broker that is very friendly for you for commissions. And if you want a really great commission broker, Tasty Trade is excellent for that. $1 a contract to buy, 0 to close, up to a maximum. When I say buy, I mean open a position. Whether you're selling it or buying it, it's $1 a contract plus exchange fees, which is a couple cents to open a position, 0 to close, up to a maximum of $10. Right? So if you got 10 contracts, it's going to cost you $10. You're trading 100 contracts, your commission is $10. How about 1,000 contracts? Your commission is $10. There are risks with options, no question about it. There are risks. All right, folks, take a look. We day trade SPY option. That's all we do, period. Nothing else. SPY, the highest traded stock out there, affordable. It's an ETF, exchange traded fund. Kind of like buying a mutual fund, right? You're actually partaking in the top 500 stocks, which is actually pretty cool. Very liquid, which is very good because when you want to sell, you want to make sure you have a market there, right? You don't want to get into something you can't get rid of it. Very exciting trading. Again, huge profit potential. And Daphne over there, she totally agrees. Let's do a little bit here. Tell you, we're going to talk about one stock, one strategy, 1 hour a day. It's basically our strategy here. And over the years, kind of figured out what works and what doesn't work in both trading and training. I think that's very important to know because you kind of want to align yourself with a mentor that knows how to teach, knows the material, knows how to convey it, and something that you can really understand. And I think we got to that point. We know what works, what doesn't work, right? SPY, why now? Follows the top 500 stocks, U.S. stocks, efficient use of analysis time. The moves are quick, Get your daily gains faster. You don't have to be in the market all day. Just because the market's open doesn't mean you have to be there, right? We like to make our money, get in, get out by 10:30. We're done for the day. Made our money, get on with the rest of our day. Go hang out with your family, your friends. Do what you want. Go boating, go flying, go for hikes, whatever you want to do. We want to make the stock market our slaves, not us the slaves to it. Although the market's pretty exciting to hang out with it as well. So SPY is fairly reliable, consistent, predictive, forgiving. Note the disclaimer on this because, of course, there are no guarantees, right? But you can anticipate prices in any market. And when you get good at this and you bring in the news and technicals, it's actually pretty cool that you can actually anticipate where the stock is going to go and you can trade accordingly. And that is so cool when you can actually beat the market in its own game. I love the whole concept. All right. I mentioned earlier that 95% of the people lose their money. They bail out of this business within the first year because they blow up their accounts. Well, we want to be, and we want you to be that 5% that makes the money, right? And that's what we do. All right. Look, the top 500 stocks. I want to show you this. This is the top 500 stocks by weight. You can see Apple is 7.13% by weight of capitalization in the market. Okay. When this thing freezes, it has such an ugly look on me, doesn't it? When my camera freezes, it has a real ugly look. It's embarrassing. It freezes because I click away from it is what it is. Nvidia is number 2. They came out of nowhere real fast, 6.79% of the capitalization. Microsoft, Amazon, Meta, which is Facebook, and Alphabet, Google, right? I think there's 2 Alphabets. Yes, Alphabet's number 9 as well, with Broadcom and Berkshire Hathaway. Warren Buffett's, he's 94 years old, that guy, Warren Buffett, 94. Still going strong. And you can see all of the stocks all the way down, and you can just pull this up. It'll give you the 500 stocks that make up SPY, right? What I like about SPY too, people sometimes say to me, "Well, how come you don't diversify?" I say, well, again, I can't think of a more diverse stock because all the sectors are represented in SPY. Information technology, IT, right? 32%. Financials, healthcare, consumer discretionary, they're all there. All your sectors are represented in SPY. So all you need to do is figure out where the economy is going that day and hitch your wagon to that and make some money. This is one of the beauties about it. I don't have to scan. In my earlier days, I was part of other trading rooms as well. And we were given certain assignments, and we'd be together every day, 9 to 4, and then Sunday nights, Wednesday nights, Friday nights. I can't remember. And we were given assignments. Okay, you do this sector. Joe, you do that sector, like this, right? Honestly, I don't even think we knew what to look for because I never contributed anything to that conversation. I wasn't sure what to look for. How do I know where the trucking company is going to go this week? I have no idea. How do I know where the financials are going to go this week? It was, I didn't even know what to look for. And the other thing is, when you look at different companies, right? When you look at different companies, so many things can affect the company's stock. Good earnings can come out, and I can talk about this all night. I don't want to kind of bore you, but good earnings can come out, but then the C class talks it down and the stock tanks. What happened there, right? The company missed their earnings, stock tanks. They suddenly they get a new patent on a drug. Their stock goes to the moon. If you're in a competing drug company, for example, your stock goes to the dumper because another competing company got a patent. There are a million things can affect this. Your CEO gets sick. And then you have to look at the sector, see how the sector is doing, how to compare it. There's so many things. With SPY, you don't have to do any of that. I get in front of the computer roughly around 8:30 in the morning, and I pull up the news, I see what's going on, and I can make a pretty good judgment call as to where the stock is going to go that day. Like, we're not that great of forecasters a year from now, or 6 months from now, or even a month from now, even a week from now. I don't really know where the stock's going to be a week from now, but I got a pretty good idea where it's going to go today. And isn't that what really matters? Folks, why SPY? Why now? Why not? Learn something new every day. Stay mentally sharp. Earn while you learn, right? Time passes anyway. You might as well make money along the way. Huge profit potential. If you're serious, if you are a serious trader, you can make boatloads of money trading SPY options. And you can leave, you can live that dream lifestyle. It is truly achievable. Exciting, thrilling to beat the market. And what I like about this, you can pass the knowledge on to your kids. Financial security. My kids, I've got a son and daughter, they both know how to trade. And when they need money, they know they can go to the market, make whatever money they want. Hey, listen, you're looking for a new car? You know what? Go earn it. You know what to do, right? And it's very liberating knowing that my kids know how to make money on the stock market. When I pass on, I don't have to worry about them. They know what to do. Or they can choose to do whatever they want, but they know in their backup, right? Backup strategy here in their living life, they know how to make money on the stock market. Real quick, here's a comparison of options and stock. Let's say you want to buy 100 shares of stock, SPY, say at $579. It's going to cost you $57,900. Folks, that's a lot of money for 100 shares. Whereas you can buy one contract, because each contract controls 100 underlying shares. It'll cost you $300 roughly, right? It varies, but I'm just throwing a number out there. That's a reasonable price. If the stock rises $1, your stock goes up to $58,000. That's the value of your stock, $58,000. If the stock goes up $1, your option having a 50 delta, which is the relationship between the stock and the option, your option goes up 50 cents. So what that means is that option that you bought for $300 is now worth $350. Now, most people buy more than one option. If you bought 10 options, you just made yourself $500. Now, here's the return on investment. 0.173% on the stock versus 17% on the option. Well, which would you rather have? I can tell you point blank here, folks, that after discovering the power of options, I never went back to trading stock ever again. I'm not interested in the stock. Why would I tie up capital with the stock versus options? Options have their risks, no question about it. And we get into that a little later some point, but the return on investment with options is absolutely phenomenal, which is what I absolutely love. Folks, one stock, one strategy, 1 hour a day. Learn from our mistakes, as you're not going to live long enough to make them all yourself. Ladies and gentlemen, it's truly been a pleasure. Thank you for joining us. We'll see you back here next Sunday night. Tomorrow we are in the trading room. Please join us if you can. Happy Columbus Day. Happy Indigenous Day. And for our Canadian friends, happy Thanksgiving. They are off for Thanksgiving. Been a pleasure, folks. Good night, everybody.
On the prize, I can tell you what